We have, as I said, three panelists. Mamun Rashid is the vice chairman of BD Venture Limited. He's an eminent banker, economist, analyst, academic. He was the dean of BRIC Business School. He's the author of 7 books on economics and business issues. And he was the youngest CEO in the banking sector in Bangladesh. Javier Suarez has been, he's been very loyal. He spent 20 years with the same company, Grupo Bolivar, which is the 3rd largest financial conglomerate in Colombia, that works on banking, insurance, and construction. He's now in charge of risk, mergers and acquisitions, and overall strategy for the conglomerate. And Miguel Moreno, he's the president of the coffee unit for Nutresa, which is the 4th largest food conglomerate in Latin America. Mr. Moreno has had a 17-year career with the Grupo Antioqueño, which is a very interesting and innovative organization, one of the largest groups in Colombia. An example of collaboration between entrepreneurs that has resulted in one of the largest groups in Colombia. And has a very, very innovative structure that was created in the 1980s to protect themselves from aggressive or aggressive takeovers from other large groups. So that's sort of a framework and an introduction. We don't have too much time, so I'm going to let them each tell their story and leave the questions and the summary for the end. So I'm not going to interrupt them as we move from one to the other. So we may start with Miguel. Thank you.
Okay. Thanks, Pablo. It's an honor to be here in King, not only representing Nutresa, which is a great company, but also Colombia, that we understand has a large representation this week here. I want to start by telling briefly what Grupo Nutresa is. As Pablo was saying, we're the 4th largest food manufacturer in Colombia. We have been in the food business for 100 years, and it's several divisions. We operate in cold cuts, chocolates, cookies and crackers, coffee, ice cream, pasta, and powdered drinks. Today, we operate from 15 countries, but we sell our products in 72 countries with more than 36,000 employees, and 12,000 of those work outside of Colombia today. We work with a little bit above 150 brands, and 17 of those brands today sell above $50 million a year each. The company is publicly listed in Colombia with a market cap of 6.3 billion. As Pablo was saying, 10 years ago or 12 years ago, the story was different in our country. And we have been able to scale and to change the company, not only in a challenging environment like Colombia, but in a large strategic region that we operate today. And today, the company, in year 2000, the company was selling a little bit above $600 million, 45,000 of those outside of Colombia. Last year, we closed with 3.1 billion and 1 billion outside of Colombia. That's a huge increase for a short period of time. We have been able to achieve that with different strategies that I will try to summarize. But let's begin a little bit with Colombia. Colombia is still our largest market. 66% of our sales are made there. And we have been able to grow at average rates close to 10% each year. And that's not easy in a challenging environment like Colombia. And let me put it in perspective to tell a little bit about the country. We have seen a lot of improvement, but we're still behind in many things. For example, GDP per capita today is $8,000. It was $2,500 12 years ago. Huge increase, but it still ranks low. Per capita consumption of food products is really low. For example, in coffee, the average is around 1.8 kilograms compared to countries like the US and Brazil that are in 4 and 6, not to talk about Scandinavia that they drink coffee all day. There are other particularities about the country. For example, 80% of the people is middle or low class. 6 out of 10 Colombians, they make their daily income every day. 79% of the households do not have a car. Because of that, there's a store in every block. And 73% of the items that are sold in the small mom and pops retail below $1. To be a food company like us, selling above $2 billion in a country like Colombia, requires to work in a different perspective. We have, as I was saying, 37 manufacturing plants. And from those manufacturing plants, we have to be productive, to be efficient, but to be able to hit the right price
price that the customer needs. We have been able to do that through intensive innovation. And one thing that has been successful in our model is the way we distribute our products. And I want to explain something about that. Today, we reach a little bit above 260,000 stores in Colombia, offering 1,300 SKUs sold by more than 2,000 sales representatives. The majority of the sales are made in mom and pops, small store in the corner. And the average order of that mom and pop is only $55. It's not like here in the US that you get an order from a Walmart, a Dollar General, Dollar Tree, and it's a full truckload that goes to a big distribution center and you forget about it. Here, we need to get to small stores all over the country and only $55 average order. That requires a lot of innovation work and a deep distribution like the one we have. The remaining of the sales are made like independent retailers. That accounts around 26%. Average order there is $500. That looks huge, but that's nothing. And then 20% remaining is made in big store retailers. That creates a challenging environment to operate. We have been able to be successful in this. I will say, and we talk a lot about innovation in Kin this week, but I have to say that that's what we have been doing. We have been innovating not only in products, but in processes and business models to reach this complex environment. The second part of the story, and I have to move a little bit fast because of time, is what we have been able to achieve outside of Colombia. Outside of Colombia, as I was saying, we moved from selling 45 million to $1 billion. We knew that our vision of growth only in Colombia was not going to be possible. Mature market, strong market shares, so through organic growth, it was not going to be possible in Colombia. So we started to define our strategic region. That was Latin America, Central America, the Caribbean, and the US. And we started a process of acquiring companies. So in these 12 years, we have acquired 18 companies, made 6 mergers, and created 5 new companies. One thing unique about our model when we go and acquire companies is that we respect the culture of the acquired company. We basically leave it the way it is. We send 1 or 2 persons to help integrate the company, but the company keeps operating as it was. Of course, some improvements are put into the company, but we give some type of independence. That empowers the team of the acquired company. And we start a learning curve that goes in both sides. So we start implementing good things that the company that we acquired was doing to be implemented in Colombia, and also things that are being made in Colombia to be implemented there. So we have seen that as a strong capability of respecting the acquired companies and allowing to growth by themselves, but also making them gradually to connect with the whole strategy of the company. The international model that we developed basically started only by exporting. From exporting, we evolved to do some partnerships in the countries, then the distribution directly in the countries, and as I was saying, finally with the direct operation in those countries. I would like to finish, to give the time to the others, by saying some key things that I would like to highlight and hopefully are the takeaways of what Grupo Nutresa has done to grow and scale our business. I will have to say that we had a clear strategy, and we have talked a lot about the strategy, but that was not just in paper and all over the walls of the company. That clear strategy had long-term goals that were really ambitious, but we focus on effective execution. It's not only put the words. Execution, I will say, is a key word for achieving what we have made. Second is the innovation, and not only innovation of creating new products. We create a bunch of new products. Last year, 20% of the sales we made were made of products that did not exist 3 years ago. But we have developed innovation in processes and business models. I don't have a lot of time to explain all of those, but probably in questions later. The third thing is sustainability. Grupo Nutresa is one of the 8 companies in the food industry that is part of the Dow Jones Sustainability Index. We have been there for 3 consecutive years, and that recognizes the efforts that we have been doing to take care of economic, social, and environmental risks. So we feel really proud of that. It's a huge recognition, but a huge responsibility to keep on delivering to all the stakeholders that we influence in all the countries we operate. And I will say last that even though the story is successful, we are a humble company. We know that we need to adjust. We don't know anything. We don't know everything. We have a dream, and we are on the way to keep on building on it. But we're willing to adjust, to readapt, and to learn as we move. And being here is one perfect example of that. Being in front of so much talented people and companies for sure help us adjust and move in a better pace for the future. So I would like to finish there and give it back to you, Pablo.
Thank you, Miguel. As I said, we'll leave the questions and the summary to the end. So,
thank you, Pablo.
Please, Javier.
A pleasure to be here, and an honor to be in front of you. I represent a financial conglomerate that has a bank. If you talk about scale, the bank has grown 10 times in the last 10 years. We're 10 times as large as we were 10 years ago. We've done a good job in that. Of course, we've had a lot of tailwinds with the economy growing. But at the same time, we're in a country in which the economy has been growing, but the inequality is still very, very high. So what's the purpose of a bank, of a financial institution in a country that has that type of inequalities? We believe that we've been very lucky, very, very blessed to be able to grow and be successful in the market. But we have only focused on the half of the country that is part of the formal economy. The half of the country that has a formal social security, employment, which is the reasonable market for a bank. But what happens with the other half of the country, with those 35% of people that have no relationship with the financial system? We're talking about close to 20 million people that have no access to financial services. So we believe that there's a clear question, and if you look at the name of the panel, which is leading business in challenging environments, we believe that that's a challenging environment, an environment in which the economy is doing very well, but inequality is very high. So as a bank, we've been successful in this part of the market, but if you talk about sustainability, we're a sustainable company, but we will not be a sustainable country if we don't work in inclusion, in financial inclusion for everybody. So we believe that we have a mission to get out there and make sure that the other half of the country has also access to financial services. So a few years ago, 4 years ago, we began working on a solution that would include that other half of the country that had no access to the system. The technology was there. We looked how to serve those clients with our traditional model, with traditional banking model. We're a bank with close to 800 branch offices all over the country, close to 2,000 ATMs all over the country. But the traditional banking model is not enough to give access to this part of the population. It's expensive. We have branch offices in which we care a lot about our brand, about our service, and so it's expensive to run that operation, especially to provide services for people that have very low income and which are non-profitable in the traditional banking concept. So we started looking at different alternatives. We also realized that this segment of the market, these people that are outside the formal economy, they don't want to go to a traditional branch office. They don't feel comfortable going there. So we have to come up with a different alternative for them. So we designed this service. It's a service that it's based basically on 3 elements to help incorporate these people into the formal financial sector. It's basically an e-wallet that will work on a cell phone. It's a platform that works on a cell phone in which we're providing these 20 million people with access to a platform in which they can have financial services, like basic financial services such as transfers, bill payment, buying airtime for cell phones, and also withdrawing money from their e-wallet from an ATM and convert it into cash, and at a zero cost for them. We felt that it had to be zero cost because otherwise they wouldn't be interested in this model. So how do you build a solution that is a zero cost for the user, that is still sustainable for over the long run, so it has to be profitable for the bank, but at the same time we achieve this goal of financial inclusion. So we basically came up with a model that had like 3 legs. One leg is the infrastructure. In terms of infrastructure, what we do is we take the cell phones. The country has a 100% penetration in the cell phone market, so everybody has a cell phone. So we have the cell phones. In many other countries around the world, there are e-wallets working nowadays in a cell phone. So that's one key component. The second component is we as a bank have a large ATM network. Why don't we put all those elements together and provide this solution to the client? So from the infrastructure perspective, we have these 2 components. The second element is our market orientation. This is not a distribution channel for clients of the bank, of this traditional bank. This is a platform for financial inclusion, so it has to be available for everybody. So the enrollment in this platform is something that you get without going to any branch. You don't need to be a client of the bank. You take your cell phone and through a menu with SMS, you enroll in the system. You never have to go to a branch office. You don't need to be a client of the bank. And you get access to this platform that gives you access to very basic services, such as the ones I mentioned before. And the third element is the business model. How do you make money? How do you make it sustainable so you can maintain this type of value proposition to this half of the country? We took 2 elements and put them into the system. The first one is we took a cue from what we're seeing happening in the technology space. When you look at the smartphone apps, in which they have this freemium model in which there will be basic services that will be free, and if you want like a premium service or additional services, you will pay for them. So we decided that made sense. We could have a set of services that would be like basic services that we would be providing for free to everyone in the country, and then for some additional services we would charge small amounts of money. And the second element, which is more relevant to the first one, is we charge all the corporations, including the government, when they get involved with this market. And they do all the time. For example, utility companies. You can pay your utility bills through your cell phone. So we will charge a collection commission to the utility company. We are now providing a service for the government in which the government is paying close to 1 million subsidies every 2 months to the very, very low income population in the country. We charge a very small amount. The government used to pay these subsidies, and the average subsidy is close to $30, $35 every 2 months. They were paying close to $5 to $8 per payment, so it was about 15% of the amount of the subsidy would be paid to the distribution channel. We, having this platform, this low-cost platform, can charge close to about $1.50 to $2. So actually we're allowing the government to give subsidies to a lot more people, and at the same time we're getting the revenue to keep the model sustainable. We're also helping the government pay do all their payroll for the army. The army in a country that has a history of violence, such as Colombia, is spread all over the country in very remote places in which the government would take cash in helicopters and give it to the soldiers. And then in a remote place, they would go back to one of those mom and pop shops and send a remittance to their family in some other place in the country, and the cash would travel back. Now we'll send it to a cell phone as a message, and then the soldier, when he receives the message, he will send it back to the family with no cost. So we believe that there's an opportunity here to have a financial inclusion model, which is our responsibility. If you want to be leading a business in a challenging environment, we have to make sure that we take care not only of the profitable part of the business, but of the whole business as a whole. We believe that connects very well with the higher purpose discussion that was being held yesterday, in which if we don't do that in the long run, we won't be a sustainable company. So that's the story I wanted to share with you.
Thank you, Javier. And now, Mamun, please.
Yes. I'm a little bit jet-lagged, even though it is pleasure to be here at Keen. Bangladesh, we have already heard from Ambassador Curtis that that building collapse. Bangladesh is known for made in Bangladesh ready-made garments, exporting ready-made garments to almost 150 countries. Bangladesh is also known for the birthland of microcredit, courtesy Professor Muhammad Yunus, and that has seen many people coming out of the onslaught of ultra poverty or poverty, and now within the last 12 years or so, Bangladesh has seen their poverty almost halved to less than 25% people living below $1.25 a day kind of standard. Having said so, macroeconomic drivers are the inward remittances. There are almost 10 million Bangladeshis outside Bangladesh out of 154 million people, and they are sending and putting Bangladesh as the 7th largest inward remittance recipient country in the world. Cell phone coverage has been a very good success story. Almost 80% of the 154 million people, they are under cell phone coverage, and recently we have seen a surge in the m-commerce or mobile commerce, also internet technology, internet usage and IT usage is expanding increasingly, and that has put Bangladesh as one of the next 11 most potential countries identified by, again, Jim O'Neill from Goldman Sachs as one of the 11, along with Indonesia, Turkey, Egypt, and Philippines, Pakistan, and Nigeria from Africa, and Mexico from Latin America. And that has, and we are seeing Bangladesh per capita income also increasingly increasing in the last few years, and putting Bangladesh soon in the map of the low middle income countries in the world, and that is showing or putting tremendous pressure on the Bangladesh entrepreneurship, which is exporting almost $30 billion worth of ready-made garments, frozen food, leather and leather goods to the rest of the world. And that Bangladesh entrepreneurship is faced with multifaceted challenges, like, say, what we have heard Ambassador Curtis sharing with us, that bureaucracy, and to some extent or a great extent kind of is not knowing or not having enough visibility about their destination model, how far they should open up the market, and if there is reforms going on, courtesy the development partners, how far reform should happen, how much they should be opening up, how many new laws should be enacted. And there has been, for the new companies trying to set up businesses, apart from slow bureaucracy, apart from slow decision-making process, of course, corruption is there, synonymous to other developing countries or the next 11 potential countries. Along with that, possibly Bangladesh regulators are yet to understand that, yes, the onslaught of or the effect of no regulation or too much of regulation. So we are trying to, the new enterprises are trying to place themselves or face themselves with either no regulation, so no regulation makes them or puts them into a kind of a no man's land with regard to how far I can go, how I should be behaving in a new economy, new land, new nation, new country, and too much of over-regulation is also slowing the process. Along with that, of course, absence of policy continuity across the government changes, new government comes in, and there are new kind of beneficiary group, vested interest group, and other group may be marginalized, or anybody who was being helped by the previous government might face a kind of a music with the new government. Results in supply chain disruption because of the political uncertainty or instability, government policy reform that I have already mentioned, judiciary also being politicized with the changes of the government and trying to only benefit or cover up the government close to the government or close to the political hierarchy people or the business group, absence of adequate infrastructure, power, gas, well-operating port, that is creating tremendous pressure towards the entrepreneurship development or business development. While Pablo was sharing with us that Bangladesh has delivered 6+% GDP growth for last several years, 2 decades or so. But again, the story with Bangladesh is how do we get into the get out of the shackles of say low growth or a growth of 6% and get into the trajectory of 8 to 10% or lower double-digit growth. And their infrastructure, corruption, and discontinuity of the reforms, these are working as serious blockade towards creating or positioning Bangladesh in the next potential trajectory of growth. And then also high growth of high cost of funds from the banks. We are suffering from say 15, 16, 17% interest rate from the financial sector, and there is Bangladesh is challenged with serious problem vis-a-vis against other next 11 potential countries, especially the countries where Bangladesh is competing with like Indonesia, Vietnam, India, Sri Lanka or Pakistan on the export opportunity space. Absence of equity financing options, the venture capital is yet to become very popular or alternate source of financing like foreign currency financing, though Bangladesh is having a good foreign exchange reserve lately, courtesy the increasing inward remittance as well as export receipt, and the development partners also giving very good support on the foreign aid disbursement. Capital market is yet to gain more depth, high operational cost because of the high real estate prices. This is also posing serious threat to the Bangladesh entrepreneurship. Absence of right human capital, like any other developing country, skilled human resource is absent. Country is going through a demographic dividend, though most of its population is young. Almost 60% of our population is between 15 to 40 years of age. Develop contingency plans to drive private sector business in case of power failure, alternate power source. That is also pretty costly because we are being forced to import high cost fuel from abroad to keep our wheels going. Maintain inventory. This is also to shield against supply chain disruptions because of the political uncertainty, political disturbances. Rapid privatization is essential but not happening, and there is a large almost inoperative loss-making public sector and awaiting reforms to happen and privatization to happen, and that privatization should not be for the sake of only the cronies of the political regime, also should benefit the real private sector entrepreneurship that we are seeing happening in Bangladesh in the last 10 or 12 years or so. Provide advocacy support, and we are also seeing that yes, in order to scale up the skill of the population, be it export, be it inward remittance, be it agriculture, we need to put up serious investment on the education, on the entrepreneurship development side of it, as well as, and most importantly, the infrastructure like power infrastructure, energy infrastructure, and of course the road and supply chain infrastructure. Working with private sector initiative means less time to market for intervention. Things were done more efficiently, expanding consumer market. Bangladesh is again becoming the middle income group, or the middle market is growing very rapidly and making Bangladesh a very good destination for the global multinationals. A country with 154 million people, say $100 increase in the per capita income means a lot for the consumer-driven companies, or and the domestic demand is increasingly increasing. But where it is holding us back, this is continuous policy reform and more clarity about the destination model and massive investment, cross-border investment on the capacity building, and more importantly, the infrastructure capacity building. We are awaiting a deep sea port because we sit in between. We are placed in between China and India, and the growth hype that is happening in China, that is happening in India, is having to influence Bangladesh growth process immensely. And now we have got another country rising just next to Bangladesh is Myanmar. So with rapid foreign direct investment entering Myanmar, Bangladesh is with hyped up entrepreneurship is also challenged with the similar challenges that Myanmar is facing, further opening up of the market, continuing with the policy reforms, as well as massive investment on infrastructure and human capital development. Thank you.
Thank you, Mamun. I mean, from listening to all of you, it seems that when you are working in countries that have all the challenges that we mentioned at the beginning, the type of innovation you have to look at is very different. I mean, from distribution, in your case, from collaboration with the government, from all the challenges of development that you're mentioning. In your case, I think it's very interesting how, having learned to solve those challenges in Colombia, you use those competencies to enter new markets, which had similar challenges that the challenges you find in Colombia. But at the same time, you had to adapt to the local culture and leverage on understand the local culture to be effective. In Grupo Bolivar's case, Javier didn't tell part of the story, but Davi Plata, which is the product he was talking about, began with a request from the government for the conditional transfers he was trying to work with to improve poverty in Colombia, and conditional in terms of given to families that could prove that they were educating their children, they were keeping their children healthy, that children were developing, and that was a government private sector collaboration which was extremely effective, that had a very interesting impact in your business model, but also had a very great social impact. Mamun, perhaps you can tell us a little bit what are the main things that you think entrepreneurs are doing to face the challenges you mentioned. Perhaps you didn't talk too much about that.
Yes, Bangladesh, recently we have seen that entrepreneurship rising, as many of you would be knowing that Bangladesh is the second largest exporter of ready-made garments to the rest of the world after China, and we have got the largest manufacturing plant under one single roof in Bangladesh, and there we are facing the problems I have already discussed. What are they doing? Bangladesh, after the Rana Plaza collapse that has caused more than 1,100 deaths in 5 manufacturing plants in one building, that has forced Bangladesh to work more closely with the buyers community here in United States of America and Europe, Australia, and Latin America, fewer countries in Latin America, Japan, China, and India, that yes, how do we ensure worker safety as well as workplace safety? And there we are seeing increasing investment coming from our commitment, coming from the buyers not seen in the past, and more shifting or relocating the manufacturing plants towards more safer places, the manufacturing clusters, special economic zones, and entrepreneurs are also putting up independent power plants to support or captive power plants to support their power generation or continuity of power generation. They are working with International Labour Organization, ILO, or Ministry of Labour, Ministry of Commerce and others to see that yes, more compliance is being ensured in the workplaces, workplace safety is being ensured, and government is working with the entrepreneurs, or rather entrepreneurs are working with the government to make sure the workers are safe. There are adequate investment on the workers training and development, workers dormitory establishment, and lately Ministry of Commerce is working with US State Department as well as US Labor Department to make sure that yes, that suspension of GSP is withdrawn, because GSP generalized system of preference was suspended for Bangladesh because of there were question mark with regard to worker safety and workplace safety, especially in the garments producing plants, and GSP is likely, suspension is likely to be withdrawn because Bangladesh has made marked improvement there. And with the establishment of the more special economic zones where the manufacturing plants are supposed to be relocated, as well as Bangladesh entrepreneurs are also accessing foreign funding at lower cost, dollar funding, because they do have a natural hedge with regard to for export in foreign currency, and Bangladesh is also supplying to the biggies like Sears or JCPenney or Walmart stores being established in China or Japan or India. So that is helping Bangladesh also to develop their entrepreneurship and make their entrepreneurship successful through better and smooth supply chain management.
Thank you very much, Mamun. Thank you very much, Javier. Thank you very much, Miguel. Thank you.